Good afternoon, and welcome to the end of week market review for September 27th, 2013. You are going to see as we go through the following slides that we definitely have pushed ourselves into a declining bullish market sentiment, with us breaking down below key support levels. So on that topic, we are going to be going through a few things here. First off, we just want to see what's been going on as far as the news goes, seeing how it's affecting the US markets and why it's driving the markets down. We're going to look at some economic reports, see if that's been playing any contribution to the overall market declines. And then, of course, spending some time on our technical analysis charts. While we do this, we'll be looking at both the S&P 500 and the Toronto Stock Exchange. We're going to be looking at daily charts as well as weekly charts. Now, these charts are going to date back anywhere from 6 months upwards to 2004. So we'll definitely have quite a few chart ranges to look at to help us get an idea of what's been going on. And finally, we're going to be taking a look at the volatility indicator. This is going to help us identify if the volatility is increasing, and if so, if we need to be cautious about it. Alright, so first off, we can definitely see that the markets have ended the week down. This has been after some concern over the federal budget and what it's been speculating. Now, right now, the Dow Jones is down 1.25% from last week's close. Now, the S&P 500 is also down. It is down 1.06% from last week. So all in all, we've definitely had some declines on the week. Taking a look at some of our commodities, you're going to see that we are down right across the board. We've got oil down 1.91%. This puts it to $102.81 per barrel. Silver did end up at a break-even from last week. This keeps it at $21.81 per ounce. Gold is down 0.36%. Putting it to $1,338.20 per ounce. And finally, we have our US Canadian pair down. It's only down 0.05%, but it is currently at 1.0305. Alright, right now we're looking at some of our economic reports. The one that we really want to focus in on was from September 26, and that's the jobless reports. We were expecting 335,000 filings and only ended up with 305. Because of the less than expected jobless claims, we did have a little bit of optimism, and that actually contributed to the one positive day amongst the other 4 negative trading days this week. So definitely a good thing to see. Unfortunately, not enough to change the direction of the markets. Alright, so here we are. We're about to dive into some technical analysis. We're looking at the S&P 500 on a daily chart, which means each of these candles is representing one day. You're going to see that we broke down below support level at the beginning of the week, and we continued our declines until we're now finding support at the 22 EMA. This happens to be around 1690. Now the MACD is declining bullish, and with the black line crossed down below the blue line. This means that support is starting to get a little bit weaker. If we see the MACD cross down into bearish territory, we'll definitely expect support to be broken through without any issues. As it stands now, though, we are still bullish, and we do still have some support at both the 22 EMA and the 50 EMA. Moving into the weekly chart, you are going to see that we still have some overhead resistance here, and we still have some support around 1660. All in all, the S&P 500 has been climbing up very steadily for the last 6 months, but it's actually been going back further when you see in just a moment here. Alright, so here you go. You can see the S&P 500 and all of its rises and dips. The thing that's most significant here is that we are just pulling back off of one of our recent highs. Highs that have pushed us into cycle highs. If it pulls back down to the 26 EMA, that wouldn't be the first time. You're going to see that it's done it several times in the last several years. This chart goes back to 2004. So if you take a look in the middle of the chart where we've started our rise, you're going to see that it's really not that significant or that negative if we pull back to these supporting EMA lines. Though when you look at it on a daily chart, you'll see it as a negative thing and a time to be extremely cautious. Absolutely, we do need to make sure that we're sitting on the sidelines when the markets go through this, but we don't need to throw in the towel and say this is the end of the positive trading streak. All right, right now we're looking at the TSX, or the Toronto Stock Exchange. You're going to see that it's flattened out quite a bit this last week, with the 5 EMA now flat. It is still between its two trading ranges, where it's been on a gradual increase. So we're not going to assume that the TSX is going to be dipping down too much anymore, but you are going to see that the MACD is declining bullish, black line down below the blue line, though you'll see that it's not nearly as significant as it has been for the S&P 500. It's very possible that with some good positive news, we'll see the TSX cross right back up into a rising bullish and black above the blue type of sentiment. Looking at the TSX on its weekly chart, you're going to see that it's still trading between its very tight trading range. It just bounced off of support this week and actually went through and hit the week's high just this week. Nothing to be concerned about. Again, it's still trading within its trading range. Considering the markets are declining, this isn't a bad thing at all. Now, when you look at the TSX on the big picture, you're going to see that it's actually trading very differently than the S&P 500 has been. It's definitely had its gains starting around the same time, but there was a significant pullback several years ago. This pullback has left it so that the TSX is not in cycle highs. It's not at its all-time highs, and it actually has quite a bit of work to go through before it gets there. First, it would need to cross over around 14,400, and then it would need to cross up beyond 15,000. So definitely a large uphill battle before we see the TSX at all-time highs. The last chart that we're going to be looking at here is the volatility indicator. You're going to see that it is currently at 15.46. This means that it is up 17.84% from last week. Now, we don't need to be too alarmed by the fact that it's up such a large amount. You're going to notice that the volatility indicator can fluctuate 5 to 10% and more without any real concern. So the fact that it's at 17% more isn't the worst thing that we've seen. However, seeing that it's above its 22 and 50 EMA after it's finding significant resistance is an alarming thing, and the fact that it continued to climb and is now above the 200 EMA definitely leaves us making sure that we're trading a little bit more cautious. If we see the volatility indicator above the 200, we definitely want to just take things back a notch and make sure that our position sizes are manageable. A very good chance that the markets will continue their declines until they end up finding some significant news that will help push the markets back up again. Until then, we are going to be trading with some caution. If you have any questions about anything that we've discussed, make sure that you either send us an email or phone call. All of our contact information is on the screen. So this has been the end of week market review for September 27th, 2013. Ciao for now.